Josie Mabone, sasekhona lana. It's time for another learner question for today. Uyazihlale sisho lapha emakhaya ukuthi sibuze imibuzo. Sina sokunikeza impendulo, that's what we're here for. Lana ngiphethe impintshi yami here at GP College. Olabade kunjani?
Awewe bra ngikhona njani?
Mina ngifresh. Uma ngwena utswakayi khuluma nabantu basedlini.
Okay, igama lami Sonwabile Oliver Ntakani. I'm from Kagiso, from the West End, and ngelezala eGP. I'm here to have fun, man. Sure.
Represent the West in Pijam.
Sure, bro.
All right. What's your favorite thing about living in the West End? For those who don't know, in Johannesburg, in Gauteng, there's going to be there's the East End, there's the West End, then there's the South, and then there's the North. One day I want to live there.
Yeah, bro. You know what it is, Felix. In terms of West, I would say in Fitu, kunentos buys in Zagala one, and then a lot of bad activity in Zagala, like every other hood. We understand, and then Tina, we try to be positive in every way. You see,
trying to be positive in every way.
Sure, like
cool.
You know.
So, what's your question for our teacher in the studio?
All right, my question is: when I start working, how do I use tax tables to calculate the monthly tax I have to pay to SARS?
Where's Sonwabile? Good question. Basically, what he asked was, when I start working, how will I use tax tables to calculate the monthly tax I have to pay to SARS? Now, this is a good question, but luckily for you guys, when you do start working, you won't have to work that out because your employer will automatically be deducting that amount from your salary and paying it to SARS, so you won't have to worry about that. But it is important to have a good idea about tax, what tax bracket you're in, what's tax all about. So before we go over a calculation, let's get a better idea of what this tax thing is. So what is employees' tax? I've got a definition here for you, and it goes like this. When an employer pays remuneration, and that's basically a fancy word for payment, to an employee, the employer has an obligation to deduct employees' tax from the remuneration and pay the tax deducted to SARS on a monthly basis. Basically, this means when you get a job one day, your boss will automatically deduct the tax from your salary and pay this to the South African Revenue Service on a monthly basis. That's all that means, and that is what tax is. In most instances, the employer is obliged to issue each employee with an employee's tax certificate, and what this does, it indicates what tax deductions is coming off, your money. All right. Tax is split into between site and pay. It's just terminology that we'll look at in a second. So what you need to know is that employees' tax is deducted during the tax period from the 1st of March to the 28th of February of the following year. So we're basically working with a 12-month period. That's a tax period. Now, what is that terminology we spoke of earlier, site and pay? Site is an abbreviation for standard income tax on employees. It's not an additional tax. You shouldn't confuse it for that. It's just an alternative method of determining tax. What it is, it's the portion of employees' tax that is applicable only on the annualized net remuneration of up to 60,000 Rand. What does that mean? Is that it's only applicable to people who take home annually up to 60,000 Rand or less. So people who aren't earning that much, that's where site comes into play. And the determination of site is done at the end of the tax period, at the end of the year. And this may represent only a portion of the employee's tax deducted during that year. Now, the balance of the employee's tax after excluding the site portion and including employees' tax on remuneration other than net, so other than your take-home salary, represents pay. And that's your pay as you earn. And that is your salary that will automatically, your tax deductions will be done by your employer, and that will be sent to SARS. Your UIF, guys, I'm sure you've heard about that. That's your Unemployment Insurance Fund. Now, this helps you out a little bit. This provides short-term relief to workers when they become unemployed or they're unable to work, maybe for maternity or illness. So if you fall pregnant and towards the end you can't work, if you've been paying your UIF, you've been giving that tax, in the end you can cash out a little bit. So it helps you out. Okay, let's look at these tax tables issued by the South African Revenue Service. This is basically the tax table for the year March 2009 to February 2010. All right, we have a table here, and this is the rates applicable to individuals. Okay, our first column deals with the income, your annual income. And the second column next to it deals with the rates that you're going to pay, the tax that you're going to pay for determining basically for what you earn, the tax you will pay for that amount. Yeah, okay. So there are certain rebates. Basically, that's a fancy word for discounts. So you'll get certain discounts on your tax. And we have two that we will consider. You have your primary rebate. That is standard. Everyone gets that primary discount. It's lacquer, 9,756 Rand gets deducted. You don't have to pay that, you shop. And then you have additional rebate for persons over 65 years old. So the oldies also get a little bit of slack. They get an additional one. On top of that 9,756, they get an additional 5,400 rands. Okay, let's look at our first example. It goes like this. Sandra is 68 years old and is retired. She invested wisely while working. She earns 235,000 Rand from all her investments per year. Determine how much money Sandra gets out per month. Use the tax table given above. I always emphasize, guys, that it is so important to read your question because you get everything you need out of your question. You know how to answer it. You make so many mistakes by not reading your questions properly. So what do we get out of this question? We get that Sandra is 68 years old. That's an important factor. We get that she earns 235,000 Rand annually per year. And what is the question asking us to do? Part of the most important part. Determine how much money Sandra gets out per month is what they're asking us. And they're asking us to use the table and answer that question. So this is our table. Now, what did they say to us? They said that she earns 235,000 Rand. That will fall into the taxable income. That is her income. That's what she earns annually. Now, where does that fall in? 0 to 132,000? No. 132 to 210? No. 210 to 290? Now, 235 is in between 210 and 290, so therefore, she will fall between the third tax bracket and pay the tax applicable to that bracket, which is 43,260 Rand and 30% of all the amounts above 210. So let's look at that. Okay, she's retired, so she doesn't pay UIF. We know that she falls into the third tax bracket. Remember, that was between 210 and 290. And that means that she standard pays 43,260 Rand. But in addition to that, she also pays 30% of all the amounts above 210. So we got to work out, what is she paying over 210? We know that she earns 235,000. So we have to say 235 minus that 210, okay? And then we get 25,000. That is what she has to pay 30% above of. So we'll say 30% multiplied by 25,000. So put the percent in your calculator, multiplied by the 25,000, and we know that off that extra 210,000, she's paying 7,500 in addition to the standard 43,260. So overall, tax she will pay annually 50,760. We know that she gets discounts. We spoke about that rebates. And she is over 65. So she gets the primary rebate, the standard one that everyone gets for free is 9,756. And she's over 65, so she gets 5,400. So her total discount is 15,156 Rand. So we're taking the amount she's paying, the tax, which is 50,760, minus that discount, and we know she pays 35,604. All right, so now we want to know how much money she gets per month. 235,000 minus that tax, we know that she gets 100,099,396 a year, divided by 12, we want the monthly amount, and we know that monthly after tax she gets 16,616 Rand.
Ngumaraza ngikhuluma isiZulu, neSotho, neSwati, neSetswana, neSingisi and parlez-vous français? Wena ukhulumani?
Ngumxhosa mina.
Ngumxhosa. Insani yathetha kawuxelela abantu ekhaya ukuthi wena ungubani?
Igama lami ndinguxolisa Babela. Ndingena eGP Education Center. I'm in matric and I'm looking forward to going to university next year.
All right. Uxolile uphumaphi kahle kahle? Were you born and raised in Jozi, or did you come from somewhere and then come here?
No, I was born in Johannesburg, but you know, ngaboma December we go to Eastern Cape, Queenstown, eKala. So yeah.
Mina ngoDecember ngiyakwanyathikazi uphukota kuphi? Which beach do you go to?
PE.
Mina ngiya ezinkwazi. All right, what is your question for our teacher in the studio today?
Question is for today. how do I calculate the amount of VAT of an item if I know the price, including VAT?
Okay, I'm gonna tell you. What she said was, how do I calculate the amount of VAT on an item if I know the price, including VAT? All right, guys, let's look at that. What is VAT? Our lovely students today, did you see the insert? They told us what VAT is, but I'm so nice, I'm gonna tell you again, guys. VAT is value added tax, and it is levied on the supply of all goods and services rendered by registered vendors throughout the business cycle. Did you know that it is the government's second biggest source of income? The government is making money off VAT. So basically, VAT is tax on all goods and services that we buy or sell, and it's registered by the companies. It is also levied on the importation of goods and services into South Africa. So if we import goods into our country, there's VAT that is standard for those goods, and the standard rate that we work with is 14%. But there are certain supplies that are exempt from VAT. All right? So let's look at our example. Bronwyn receives calculators to sell in her stationery shop. The price of the calculators do not include 14% VAT. Her retail price before VAT is $125. Calculate how much the calculator will cost with the VAT added. Remember, guys, I always say read your questions, otherwise you will fail. What are they asking us here? They're asking about calculators. They say the price of the calculators do not include the 14% VAT. So her price before VAT is 125 Rand, and they want us to calculate how much the calculator will cost with VAT added. All right, let's look at that. There are two ways to work this out. The first way is to calculate the 14% of the cost price. So of the original price, we're going to calculate 14% of that and then add that to the final cost. That works also, but what we're going to do today is the second one. And the second one is where we add 100% to 14% and we multiply it by the cost price. I hear, right? It works with you guys. It's easy. You put that percentage in your calculator, boom, you're ready to go. Why do we use 100%, guys? Because we're using a whole amount here. This good is 100%. It's not half of it. So we say 100%, we plus that standard 14%, and we multiply it by the number that we're working with. And in this case, the calculator is worth 125. So we say 100 plus 14%, that's 114, multiplied by 125, and that gives us 142.50. That is the price including VAT once we've added that 14%. So guys, super easy. You guys understand? You guys understand? I hope you understand, because we have to pay this stuff on our thing.